Veteran here with ITG, Independent Traders Guild, and I'm going to go video 2 on the PVI system, and I'm going to lay out a static trade that is one of the most consistent trades that we offer. We have to share with our members in our Discord. Again, I'll go through the process of calculating this. The whole system itself, yeah, it's proprietary. It used to take me about 16 hours a weekend. Now I've got it down to about 5 to 6 hours just to create and generate these PVI levels. I'll explain that in other videos. Trying to keep them short and sweet instead of doing these big 1-2 hour training sessions. But you can see high and low. Again, we breached one time in Labor Day, this past Labor Day, and then we got real close right before Christmas where we had an intra-week. I'll show all these in time. Again, I don't know that you need to see 50, 100, 200-day moving average, a 21 exponential moving average on the charts per se. Not at this point. What I'm going to go to is our weekly supply demand levels. These are the white lines that are here. And I highly, highly encourage you, again, if you're a member, if you're a new member and you're going through these videos, one of the easiest ways to see which side of the markets we need to be on, week in and week out, I ask the same question. Are we above weekly supply? Are we below weekly demand? If we're below weekly demand, you can see that when we get below it, and we fell below this one on Wednesday, December 18th, we flushed. Last week, again, we gapped down this past week. SPX closed here at 58.27. We opened Monday morning at 57.82. 45 points below Friday's close, gap down, and we closed Monday above weekly supply. When we're above weekly supply, we lean long. How do you lean long? You buy calls, you buy call debit spreads, tight debit spreads, or you sell put credit spreads, or you sell naked puts. Again, once you're above the box, you want to lean long, right? And so if you held calls this week on SPX up to 6,000 because we got above weekly supply, you literally made close to 200 points on SPX. Previous week, if you get puts, when we fall below it, we fell below it at 50, 59, 55. And we went as low as 58.04. We closed at 58.24. So we closed 130 points in the money if you bought puts. Again, when we're below it, you want to lean short. When we're above it, you want to lean long. When we're inside it, right here, you're trading theta. Now, the static trade that we typically do, and we do it on ES and we do it on SPX. But the static trade we typically do is we like when the market opens, Globex Sunday night, if you got interactive brokers, you can place SPX options at 8:15 p.m. Eastern. If you got ES, if you want to trade futures on options on ES futures, then you can trade those at 6:15 p.m. on Eastern. When Globex opens, right behind Globex opens. If you wait till 6:15, you're going to see some volume. Not much, but some volume. What we typically like to do is we look at the weekly supply demand box. In here is theta. Out here is delta, in my opinion. And so what I typically try to do in ITG is we try to buy a 5-wide debit spread at weekly supply for $1.25. And we try to buy a 5-wide put debit spread at weekly demand which is support, for $1.25. That means I've put $1.25 here and I've put $1.25 on here. So I have a $2.50 debit. However, if we close above the box or below the box, doesn't matter which, if you got them both on, if you close above the box or below the box, you get paid $5. Well, in what world do you have an 87% probability of closing outside the box? And outside the box means I'm going to get 100% return on my investment. That's why we call it a static trade. You put it on, you don't take it off. And so for those that have the script, all our ITG members have this script. You look at it, if you got 5 wide on both sides, you made $5 off $250. Here, $5 off $250. 100%, 100%, again, 100% here, even though we closed just underneath it. You probably didn't get 100%. Your 5 wide was still worth $4, and I think it was $4.73. Again, 100% return, 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 100% return. Here, you lost. This was a scratch. We closed right at it. You might have made some money with your long at weekly supply, but you're short above it. Finished out of the money. You might have gotten a little bit of premium, maybe a scratch at best, but probably a loss. But again, if you're 100, 200, 300, 400, 500, 600, 7, 8, 9, 10, 11, 12, 13, and now we're 13 and 1, I'm good with that. 14 and 1, 15. This one's a loss, no question. We finished right in the middle of it. So now we're 14 and 2, right? This one closed just inside it on Friday. So if you didn't close it, count it as a loss. 15 and 3, 16 and 3, 17 and 3. This one you got breached, but you still won. 18 and 3. Why? We're way outside the box. 18 and 4. Let's go to 20 weeks. 19 and 4. Let's go to 20 wins. There's 20 and 4. So if you go back to August 16th of 2024, you have won 20 weeks trading weekly supply demand long or short. And you've lost 4. And when you lose 100%. When you win 100%. 20 wins, 4 losses, static trade, just using these numbers, knowing we have an 87% probability of closing outside the weekly supply demand box. Guys, that's all I got. 7 minutes. We are out. Peace.